The debt market dynamic in the United States points to the necessity of a change in expectations. Investors seem to be relying on the fact that the Fed would soon cut the benchmark rate. There is no other reason for a decline in the 20-year bond yield from a 5.25 to 4.78%. It's highly likely that the already deep decline in the US dollar is far from its end. What's more, the US macroeconomic reports are reflecting a worsening situation more and more often. Thus, today's data on existing home sales is expected to show a drop of 1.3%. This will also exert pressure on the greenback. In addition, today the Federal Reserve is going to disclose its recent meeting minutes. Investors are likely to search for hints about the beginning of a monetary policy loosening. On the trading chart, we see that the euro climbed above 1.0950 against the US dollar amid an inertial movement of a speculative nature. This price movement points to the mainly bullish sentiment among traders, who are ignoring a technical signal of overbought conditions. If the euro increases higher, it may touch the psychological level of 1.10, and this is the first target for buyers who are trying to cause a recovery process in the euro after a decline seen this summer. Nevertheless, traders should keep in mind the overbought signal, as a touch of 1.10 may lead to a decline in the volume of long positions, thus causing a pullback. Meanwhile, the pound sterling not only recouped all the previous losses, but also surpassed their resistance level of 1.2500. As a result, the price consolidated above this level, which confirms the continuation of the upward cycle. If the pair goes on a rising, the pound sterling will have a chance to gradually recover after a decrease recorded during the period from the middle of July to the end of September. If the upward trend stops and the quote settles below 1.25, the pound sterling will either drop or enter a sideways channel. That's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.